everyone, it's Jeb Hanwerger from goldstocktrades.com, and I wanted to update you December 21st, getting into the last week of tax loss selling, the most wonderful time of the year. The holidays, the new year is also the time when we get cheap stocks, cheap gold stocks, because of tax loss selling. And especially this year when we've had so many gains in cannabis stocks. So investors are sitting on these gains in cannabis stocks and these huge losses in resource stocks that you have this huge divergence. They have these profits to have to set these off these losses. So we're at the end of this tax loss selling period. First chart that we look at is the GDXJ, the Junior Gold Miners ETF. And this is important to follow because these are what the algorithmic traders follow. And we know that the GDXJ is a proxy for the mining index. It doesn't follow the stocks that we follow, the small cap junior miners that are on the venture. These are not really junior miners. These are more mid-tier producers or larger companies. They're not really juniors per se, but we should look at this chart anyway. And if you see here that we clearly have a sort of W-shaped bottom forming, double bottom, like a W, and that's very bullish. It means that we're basing here, and we could have a powerful breakout. This is now 5 months in the making. I think that breakout may come after next week at the end of tax loss selling, that first week in January. Even before that, we might start seeing this bounce and this breakout above the 200-day moving average on the GDXJ, which is $30.25 right now. So we're almost there. Light volume this week. A lot of volatility this week. Lots of trading and market movements, and you'd expect to see more volatility. So if you notice here, we're holding the 50-day, and the 50-day that was once going down is now beginning to start pointing upwards. Here we had a bearish reversal day, which isn't great technically, but we can't make that just the basis. So we may see it come back to the 50-day moving average before finally clearing that 30.25 area, which is that October high. So exciting time for the junior gold miners. I think that next week's going to be an important time to look at some of the top discoveries and the top development projects, and make sure you focus on good jurisdictions. You don't want to be a Tahoe Resources in Guatemala that gets taken over for Pan American because they got legal troubles in Central America. Got to be careful in South America. These countries turn. Sometimes they're good, sometimes they're bad. You just never know. Ecuador was doing so well. Now Ecuador's people saying not so good. Argentina was doing well. Now they're saying not so good. Brazil wasn't doing well, and now they're saying Brazil is actually doing well. So South America is just always changing, always turning. But Canada, USA, lots of excellent opportunities, extremely discounted junior miners. Really want to see that clear that 200-day moving average before we really begin to highlight new situations and get pretty aggressive here. So very important to follow the GDXJ because that will open up a lot of doors for junior miners, and we're beginning to see the financing opportunities opening up. We saw Sabina Gold and Silver just raise a large amount of money. We've seen some strategic acquisitions. Goldcorp that came into Legion Gold that we highlighted earlier this year, and Japan Gold that we highlighted. Both stocks came down significantly as the venture has had a huge collapse this year, which we all know. But look at where these strategics are putting their money. And we heard news today of a company that we've been following this past whole year, at least since this summer, in BC. We see Teck, the large copper producer, the big company, make a strategic investment into Marco Day's Sun Metals, SUNM, for their Stardust property, where they're partnered with Lorraine Copper LLC. So very exciting times where we're seeing strategics come in now and take part with some of these juniors that are deeply discounted, and it'll take place even more when that GDXJ breaks through that 200-day moving average. And the big news that we've been waiting for many, many months is the breakout of gold, and where we're looking at the GLD, which tracks the gold price, the ETF that tracks the gold price, breaking through the critical 1260 area, and which is the 200-day moving average on very good volume. So we're seeing more money, especially since August, coming into gold. Gold bottom in August when we had that record short position in gold. Bottom there. Wrote an article on Seeking Alpha saying that this is the capitulation bottom, almost to the day. Started bouncing off there, and the 50 days now moving higher lows since August. So now, first, the money's coming in, the money flow's coming into gold as a safe haven. Then you're going to start seeing, because of the tax loss selling, it take the GDXJ and the silver price, and the silver miner is going to rapidly catch up. And, it'll be interesting to see where gold closes the week. I'm hoping that it closes above the 200-day moving average at 118.78. That'd be very important for the algorithmic traders. Let's hope that this 200-day moving average is still sloping downwards. So it may act as resistance. We may fail here. We may fail here at the 200-day moving average. We may get some sellers. That might take it down to the 50-day. But so far, the price volume action is still very bullish. Lots of volume coming in on the up days. So I haven't seen yet that selling. So today is going to be a very important day because that's where it closes the week at. And where it paints the tape at the end of the week. 118.78 is the 200-day moving average. We're at 118.66. Much less volume today on the sell-off than yesterday when we had a much a larger volume. But still, the 200 days pointing upwards. We're a little bit overbought. It may take some more time to clear the 200-day moving average. We don't know yet how much longer, but it's very important that that 200-day moving average starts basing and starts turning around and going up. And, which was before, and then somehow we had the dollar was very weak back when it was all this trade discussions and tariffs, and the Chinese collapsed the gold price, and the dollar went up very high with the trade tariff. So it's been a crazy 2018, but that could reverse very quickly, just as it came down very quickly from April, May, June, and July, pretty much. We've seen October, November, December, we're moving back up, and we may start seeing the 200-day flattening out, and we may see it eventually moving higher and breaking out. And the critical point is going to be that 1400 level. That's going to be a critical point. And I think that gold's on that verge. Remember, gold is inversely correlated to stocks. So when stocks start collapsing, the money starts coming in to gold. And even more so, once a dollar starts turning over, which I think that investors may be seeing that the Fed may start backing off because the housing and the banks and all are under stress right now. You're going to start seeing the gold taking off, especially when the dollar, because now we've seen gold and dollar kind of rallying together the past few months. But I think gold's going to start decoupling, and that's when you're going to see a really breakout move through 1400. And if you look at gold in terms of Canadian dollars, the 1800 is a big breakout there, cup and handle breakout, which I've shown that chart. Check it out on my Twitter feed. The chart in Canadian dollars. So we'll pull it up quickly here. Look at that chart. We're getting close to a major breakout here. So, and a bullish golden cross in the 200 days, looking very positive in terms of Canadian dollars. So those Canadian explorers and developers are quite interesting right now. So taking a look at the dollar here as we close the week, you see that it was hitting multi-year lows and gold was about to break out here, but all of a sudden we had the trade tariffs and investors got scared and started pulling money into the dollar. From April all the way till December. But if you notice here, the momentum is beginning to peter off right now, and we're beginning to see gold get some of that. See the volume, not much now, as we had back here and in the summer with the dollar. Now it's beginning to peter out, and the momentum is declining, so that may indicate the 50-day moving average and the rising uptrend, it may be in danger, but not yet. So we will be monitoring the dollar very closely. Momentum's declining, but the 50-day and 200-day are still in an uptrend. Cash is still king. It's been the story for 2018. Cash is king. U.S. dollar has been taking the attention. That may be changing soon as investors go into gold if the moving averages and the 200-day moving average, if gold is able to hold the 200-day moving average. And for most of this year, I've been telling you be careful of the S&P 500. Even though it was going into new highs, making new highs every day, I said, please be careful. The danger of a crash is imminent. Interest rates are rising. The stock market was very overbought. And as soon as that trend was broken, I said, watch out, we're going to have a collapse. And now we see that we've broken into new 52-week lows. All the gains in 2018 have been wiped out. We've gone down significantly into bear market territory, violating lows. Leaders are down more than 20%. Bear market territory. Gold is beginning to get attention, and look at this selling volume here. And it was selling last year too. That's why I was very concerned when it made new highs on lower momentum and low volume. These were signals. Be careful. And I said that to you, and it's on Seeking Alpha, and it's on my website. Be careful of stocks. Be careful of the crypto and cannabis bubble. Stick to gold, precious metals, in case of a safe haven. You might need that insurance, and we're beginning to realize that at the end of the year. And this is reminding me a lot of what 1999 looked like, the dot-com crash, the beginning of it, and what 2008 looked like, 2009, and now 10 years later, 2019. Gold, the junior miners are beginning to finally be on the verge of what possibly could be the next bull market, the next major leg higher, the 40-year cycle, like we had in the late 70s, where gold went up to all-time highs. That 40-year cycle, this could be the beginning of that gold rush and the beginning of where the homestake miners begin to outperform the Dow. And I've shown you that chart before. Remember, this is what happens when the Dow crashes and gold is inversely correlated to the Dow. We've seen a record move in the stocks. Gold's been depressed for 10 years. Now, the opposite may be occurring. We're seeing the miners outperforming. And in the 30s, in the Great Depression, the miners were like kings. They were made a fortune during that time. And right now, we've had the worst fall and the worst crash from that S&P 500 chart that I showed you before since the 1929 Great Depression. So stay tuned to goldstocktrades.com. Important week next week, tax loss selling. And at the end of the year, we hope to come out with some new stories. Especially pay attention to the companies that have made strategic acquisitions this week. By Goldcorp, by Tech, which we highlighted before. Remember, I may have share positions in those companies, and they may have been sponsors or current sponsors. So stay tuned. Be careful of any conflicts of interest. Always speak to a financial advisor. And have a great holiday season and a happy new year. If you don't hear from me until the end of next week. Take care.